Greetings, market rebels. Welcome to this week's macro measure video and to the sector situation video as well. We're doing another combo video this week. It's still listed with Sunday's date, but it is actually, again, Friday, June 21st, and it's just a little bit here, a little bit in front of 3 p.m. here on the East Coast. So not having the benefit of the closing prices, but we're going to get into it anyway. This is just a life situation for me in terms of I need all the time I can get for many various reasons, just piling up. So, which I knew was coming. So we're just kind of adapting to a late Friday recording, and guys are keeping an eye on UOA hits and so forth for me in terms of sending out updates or new fresh ideas. Here's a trusty disclaimer. Here's our trusty intellectual property rights notice. Again, this is Wayne, and I'm going to get into it. And it's unfortunately, I think, going to be a little bit more status quo. It was so far that kind of a week. I think things did probably get a little bit worse in some ways, but at the same time, things got a little bit better in others. And I think the real key here is that a lot of the week's advances that started really early on Monday, a lot of those were largely reversed, but critical or key support hasn't been cracked yet. Only the most nearby support has been cracked. So that's probably really the update. Going into it, I'll just go through things quickly. Again, I would always say if you're baffled as to what to do, um, the trend, sticking with the trend is the way to go. I mean, it's almost always is. It's very difficult, especially to fight against a very strong bull trend and come out consistently as a short side trader with the kind of performance you can when on the long side. But the leadership really has continued to narrow. Some of it's come under pressure, namely SMH and NVIDIA and SMH. But I would call this week a wash with an asterisk because we did get some new all-time highs, but they have honestly nearly fully reversed. They did crack the closest form of support, but they did not crack the 10 SMAs in the Qs and the SPYs. Excuse me. We will cover that. The diamonds and the IWM are still not that enthusiastic. They didn't have atrocious weeks, but they're really not let's say powering higher in the wake of what's been happening in SMH, the Qs and the SPYs. They're really just kind of hanging in there at the moment. So it's again kind of brings about the week as a wash. I do think though, right, that the NVIDIA SMH situation could become more of an issue if we see more weakness, but it just hasn't, they really haven't completely cracked anything in a big way, even the short term SMAs that a lot of people follow. So that could happen quickly, right? That we could finally get that situation where everyone recognizes that, hey, it did really have a really crazy run and there's some profit taking and people don't want to get trapped holding on too long. And that would really put a damper on the markets mood, I think, if SMH and NVIDIA start to really retrace since they've been so critical in the market's ability to move higher. Again, that's really more of a math thing if you look into it, but that's the way people talk about it, right? The market moving higher. So most sectors are still not out of the woods, but a lot of them did sort of bounce back a little bit, right? So we've got to give them their due. The market breadth divergences we've been talking about, they're still an issue. In some ways, they've gotten a little bit worse. In some ways, they've gotten a little better. I'd say on balance, things are just not good though. And so it sort of remains that divergence between you don't like to see build, build, and build and build. Initially, it's not the biggest deal in the world. Everything doesn't move in perfect harmony all the time. But if it keeps sort of persisting and worsening, usually that gives way to some sort of a sharper pullback. But again, the timing is always not so easy. Anyway, they are bidding up the dollar a little bit this week. Yields, not so much. They're still kind of on their way down at the moment. I think that, again, to me, that could also be due to like heading for the safe environs of fixed income, uh, trying to get some yield, just getting a little bit safer. The VIX was flashing big time complacency, but it has hung in there for the week. It just hasn't really ramped up. So we'll have to keep an eye on that. It does look like it's at least off the mat. KRE, though, which we'll cover, is not looking that great. So that's been something we've kept on the back burner radar to really mix some metaphors up. We've done that for a while, and because we just felt like it wasn't never really an issue that was solved and thought it could come back. And the charts say that it could be time to become concerned about that, if you ask me. Could see messy subsurface market masked by still or mega caps. So there's a lot of things where I'm seeing some attempts to sort of maybe potentially go long. Never know. Could be also be hedges. But in the UOA land, there's been some buying and some of the big names across the board. So again, if they can keep some of those things, get some of those to bounce back, or keep some of those buoyed, or just maybe upgrade some and get them going, that could help sort of buoy the entire market due to the weights. Do recall that the fourth year of the presidential election cycle says we should expect a good summer. However, those buybacks we noted that were supporting the market pretty strongly for a while, they're supposedly in the rearview mirror with EPS season coming up. That could lead to some profit taking. We mentioned this last week, so I'm leaving that there because maybe we saw the top for now on Tuesday morning, more or less, in some of the major index ETFs. Maybe it was Monday for others. Maybe it was later in the week for others. Regardless, maybe there's a little bit more of a pullback to come. We'll see. We need to see the next level of support come under pressure to really start to believe in that. And that's maybe when you'll see some people pile on. There could be some follow through there. We shall see. Let's see. The end of the month, end of quarter, this all there too. That tends to be more bullish. The start of things, months and quarters, generally is presumed to be a little more bullish. And then the anticipation, excitement over the engineered earnings beats that are likely on the way, they're also, of course, bullish. So July is normally quite good. Last year, I believe my recall says that July was very good, and that's what is expected by the earnings. I'm sorry, the election cycle. So we might have that markup motivation early in this month as well, for the reasons we've already noted, but also we have the big American summer holiday, right, with July 4th, Independence Day. So that's always something that you have to keep in mind. It seems sort of silly, but I would say more often than not, they find a way to make things look pretty good before a bunch of Americans get together to discuss things. So there's no surprise there. The wheels continue to come off the bogus data policies that are promulgated by plenty of outlets out there. I think the big little ad, or should say the little ad this week, is really the Euro banking, Euro real estate that's there. That's now becoming an issue potentially again, which we'll have to see. I think really the one negative about the sectors is, yeah, there were some bounce backs, but in terms of really still trying to do well or really power, the only thing that really did that towards a new high was XLK. And that's it, the technology sector. So the sector fates are in flux because they're not really, a lot of them are not taking out highs. A lot of them aren't close enough to highs to even consider that. A lot of them did again bounce back, but they're just not really galloping, right? They're kind of ending by and large just kind of on a somber, almost summary note. So it's not like anybody's in a real hurry to get themselves into a lot of these things just yet. But of course, that's the other way that we discussed last week that the gang could keep things going, is that instead of just relying on the big dogs, they could maybe take a breather from that, let some of those things correct, like we're seeing in NVIDIA and SMH, and obviously some of the stocks in that ETF. But it would be the sector started coming alive where they buy a lot of other things. they're perceived to be cheap on a technical basis, right? Because they are lagging behind the so-called leaders so much. I do think it's tough to get a read on everything, but I think on balance, you have to be a little concerned by the way that the XTN is still looking. I think that's a key sector. I think it's given us some warnings in the recent past and throughout the years when things are just not all that great and that the market's sort of trading a little too high and maybe it's on borrowed time. That's still an issue. There was a better week put together by XTN, but it's still not really looking that great technically overall. It needs to do more work to really change its trend and its fortunes. And so I think overall there's still some concerning signs out there, but we did see other key sectors like I've got listed there take a turn for the better. So there's a little bit of hope that way. That's why I'm kind of calling it a little bit of a wash, because I've got a lot of point counterpoint, and I think it's a little bit of a concerning wash, where you can't really say that you really lost a lot of ground, but the ground you gained, you gave right back up, and largely, and things are just not ending well, and some of your leadership's under pressure. So I think you have to still come out of this and say that it's tough to get a read on what's happening with the dollar and yields and VIX, for a variety of reasons. But the trend is still up. And we know that critical support, the most close by support has been cracked, but not the most critical sort of widely followed, which would be in the case of the Qs and SPYs would be the 10 SMA. So that's still intact. That's often supportive of market price action. We have to consider that we're still under the Esterhaus warning, the old be careful out there warning, because we're too close to those SMAs in the SPYs and Qs to be comfortable. They're the top dogs left, as you all probably know. Diamonds and IWM just haven't been anywhere close to being the leaders of late. And so you combine that with the subsurface issues out there, the breadth issues, the economic deterioration that's still happening, the fact that a lot of this stuff is, even as, let's say, middling as it is, it's largely being brought about by statistical chicanery. So that's a whole nother problem, but I don't know. I think that's probably always the case, but maybe not so egregious. I think we just, as time goes by, things just become more and more egregious that way. And of course, we're leaving a lot off the table, but it really has to do with people just don't want to deal with reality anymore because it's not a good reality. So instead of doing that, they're just apparently focusing on fantasy, and they're allowed to do that and get away with it because not enough people are willing to call them out, at least people of notoriety. Maybe that'll change, but don't if and when I couldn't say. Let's on that note, we covered all that. Let's get the share reestablished and repositioned here so we can move about in the charts. I'll get things over here out of my way. And then I think I'm going to try to just bring up my one. I'll try to move everything over to my main screen. And that's right here. But let's take a look at the SPY for starters, of all the things we cover. And the reason why I'm doing these combined is not just that it's convenient and a little bit less time. That is certainly helping me out with all the stuff that I've got going on. But really, it's just because I don't think there's been enough departure or change really from last week that it's worth delving into the sectors. Everything sort of came back. Mostly everything came back a little bit, and they haven't done much with most of it. So you're sort of in a wait and see. Nothing's really emerging. I think the biggest story probably of all of it would be that XLE and XLF came back, but I just see a lot of other sort of like, nothing special. And I think a lot of it's trading as a package. And so as a result, it's sort of risk on, risk off. And we might be having that decision might become more impactful in the next few weeks, right? We'll see what happens. But what I wanted to bring up, I had it all lined up on one of my charts. Let's see if it's this one. It may or may not be. Nope. I thought I left this one there for us, and I'm kind of a little, maybe it's this one. I put a little comparison line together. Nope, that's not it either. Okay, great. Well, I might have to go back to the drawing board on this, and I don't need Brave. I need my second one down that I did this on. No, I apologize for this, folks. I'm not sure because I thought I had that right behind here, right behind everything, waiting for me to bring that one up on Spy. And I might just have to, what I may do here is just add this. So let me just do a quick edit here. There should be, there it is. Let me just edit this to show the study and then put the equal weight up there. So this is sort of getting a little more, I guess you'd say, airplay, something like that these days, where, let me get this into better view for everyone, where you can see, right, where if you equally weight all these, you equally weight all the companies versus the current weights that they represent inside the SPY. I'm going to get the, well, I might end up having to force me to keep the percentage in here. Yeah, I think it might do that. It doesn't matter all that much, though. I think I may as well just do it and discuss it that way anyway. But the you can see this is, I believe this is the line. Let's make sure this is, yeah. So that's our comparison line. So you can see the equal weight, basically S&P versus the S&P ETF itself. And this is what's got a lot of people concerned, right? That you could see how much it's not just that there's this discrepancy or divergence. It's really that it's grown. It's sort of stopped tracking to the extent that it was back in here, and it's just gotten worse and worse and worse. And so the idea is, right, that which is no surprise to everyone that watches the videos, it's nothing really groundbreaking, but it's just these big weights that they've been using, mainly, right, NVIDIA and the semis, to help power this thing to these levels. And a lot of other stocks just aren't coming along for the ride, right? If you look at the equal weighted, you're seeing that it's sort of stuck in the mud. So you get this big, really divergence between the two. And that normally isn't a good thing, but I don't really want to go into that. Besides to make mention of that, I'd rather just now turn this off so it doesn't get in our way. But I'll give folks this, like, I think it's worth keeping an eye on, and ideally you'd rather see things really move up in harmony, but you don't always get that opportunity, and it's very, I'd say it's very common that they don't. Not that I'm trying to poo-poo what people are focusing on. It's just that I think these divergences can build for some time, and eventually they do probably matter a great deal, but at times they can just really defy people and their expectations and just continue to almost intensify, because when they come under more scrutiny. So I think if you're an honest trend line drawer, you could probably connect the lows from here with this low and then today's low, which is just above the 10 SMA. And so that's where you're at on SPY. So you're holding above the line we just drew, and you're holding above the 10 SMA in white. What I mean by the closest support, I think it would be, right, this sort of flat line-ish stuff that developed right there with you when you had a close, you had an open, and then you had another close in close proximity in SPY. And it did take that out. That was near 547. And you did trade down as low as 543.02, according to today's data. So I put an idea in on SPY. I had one in, and it just did. I don't think it triggered, and just kept moving away and higher based on UOA. So what I did was I just sort of renewed that idea from a higher level. And I don't recall what the actual trigger was on that, but I think I tried to move it up several dollars from where it had been. Let me see. I think I put that out. I want to say that got put out yesterday or the day before. Let me just see. I moved it up to 546.73. So it got moved up probably about $4 or $5 from where I think we had it. And you've got some gaps in here. Let's not lose sight of that. But this is what I mean about it's really not, nothing really major has cracked yet. We thought it would be very interesting coming into the week, right? If we ended here and they suddenly couldn't do much, and then you'd be really within close proximity to the 10 and that new support line I just added. But it didn't work out that way in terms of the path taken, right? You only got close to these after another pop. And we've seen that a lot where the early part of the week is sort of flip-flop. The early part of the week has been powerful, and then they've been ending sort of on sour notes, sometimes more than they had been. But nothing's cracked yet. Not the look you really want if you're a bull, but you have to call holding support a win in the end. So as of now, right, kind of again back to that, it's been a wash of a week, and it really has been, because if you look at last Friday's close, you're not too far removed from that in a $545-ish ETF, right? You're barely removed from that. It looks like you're maybe 1 or 2 points higher than where you were last Friday. So maybe not even 0.5%. So that's the kind of week it's been. But it looks like with just a little time left, they're going to be able to hold it. It's a very similar look in what may be the more important index ETF. It's a very similar look in the Qs, where you can see that we're above that rising white 10 SMA right there. And this is the most aggressive line that I could get in there before we left. I drew that and left it there. And this week's action opened below it on Thursday and continued to weaken there. But so that was probably the most aggressive form of support that I could shoehorn in there. And yes, that got cracked. But again, notice that all the SMAs are stacked in slope. You've got of course, you've got all positive slopes in all of them. So this thing, if it does fall, is going to fall into the normally welcoming arms of rising SMA support that a lot of people follow. I not personally not big on some of this stuff, but the legacy stuff matters. I think it has impact. So we stick with it in terms of taking note of it and sharing that in these videos. But I think, this you probably could get another kind of not such an important line in here that a lot of people would disagree with even drawing. But again, me and trend lines, I don't do that. And that sort of puts you into an area where the 15 will be right there, right? Probably by the time you fall there, the 20 in blue will be getting close to it. And that's often a big deal, right? There's the 20. We could go back in history, but I don't think I have to. And you'll see just how many times they've managed to plunge below the 20 and then pick it right back up again and then reestablish the trend. It's just a very key SMA, I think, to follow. If you don't want to have as many as I have, that's understandable. But I think the 20 is definitely one you ought to hold on to, just because it tends to be relevant so frequently, even if I don't agree with the underlying premise. But who am I? But yeah, so the Qs haven't cracked anything in a big way. I don't know what else to say than that. It's not the end of the world yet. I think it's showing you signs, but remember, there's a lot of people that feel this way. They feel as though this market is out of step with reality, that it's been getting more and more out of step with reality, that it's starting to border on absurd or ridiculous. And these are all the things that feed the next short squeeze, unfortunately, but that's the truth. So you may have some great points, and I wouldn't even probably disagree with you if you feel that way. But until they really crack, this is why I'm just big on waiting until something cracks. You have to have something to trade against. If you just start saying things are ridiculous when they break them out again, they can really put you under a lot of pressure in the next few sessions. Like if you thought it was ridiculous here, for example, in that candle, they break it out, and then you're dealing with a whole week's worth of more of absurdity, right? And you're like, this is insane. But again, you need some kind of a level to trade against. If you think it's crazy here and you think they're about to back it off, you've got to still acknowledge that if they close above where you, right, if they close above where you thought it was ridiculous, after taking a little bit of a breather, then they probably have enough energy stored up again to do exactly what they did. That's the presumption you have to operate under as a counter trend trader against a strong, bullishly acting market. That's why I don't really try to put people in too many of those. Having said that, I think when it gets a little more to a lot more compelling, I try to sprinkle those in. We did actually have one of those in the SOX L this week. I meant to get some in other names, but it wasn't meant to be for a variety of reasons, which I won't even go into. I put bull side ideas in those names, but I had the hunch that I was seeing some hedging, and I felt just due to conditions that we discuss in these videos, and so I went with a bull side idea, planning on providing a bear sider. A lot of this was in UOA Pro. A lot of people don't like that, but if you're really just opportunistic, there's nothing, and you can just I mean that's the way I think it's smart to trade opportunistically, where you just don't really have a vested interest in if it goes up or down. You just want to make money for your account. That's the whole point. And if you're willing to be open-minded, sometimes when you see something stall out in reverse, that can open the doors to an opportunity, and that's what I was sort of sensing could happen in Soxhole. I think I put the idea in Soxhole yesterday. I don't recall where. I think it was in the 60, where was that? 60 something. 6240 was the trigger on it. Let's see what it traded down to, 56. So I don't really get into these types of levered ETFs, that often, but because I couldn't, for a variety of reasons, put the NVIDIA short in the way I wanted to, and the TSM short. I think I had a TSM short, but there were a couple others I wanted to sort of put a short side companion or bear side companion in. Wasn't able to, and I had to go with this and a couple other things instead. But that's a pretty decent little job, so I can't complain. I hope folks did well on that. But look, I mean, this is what you have to prepare for when you're playing that short side. If it gets to support, you should be right, probably at the very least rolling, if not closing some and aka trimming and then rolling others, or maybe closing them all out when you start to see that bounce unfold, with the anticipation that you might have another trade. If they fail to really hold above support and they start to roll over again, you could maybe get in again, but you've got to be ready to capture ahead of time. Now, there are gaps in here. There's going to be, we should probably be looking at SMH instead, but there's gaps in this area, and those gaps could come back and matter. Here's, obviously, I'll put it like I typically do. I'll put something on here for folks. So if we do get the follow through, right, this is when I care about gaps. When they're gapping things away and it's beyond 5 days, I don't really care about the gaps. I think if you get fixated on gaps closing too soon, it can really hurt you, because you sort of allow that gap to dominate your thinking a little too much. So again, I think you're better off waiting for momentum to seemingly having petered out in the direction of the trend, and then start to see some signs of reversals. But there's quite a few gaps in there. There might even be a little mini gap kind of hiding in there too. I'm not expecting in next week, for example, unless there's something absolutely extraordinary, I wouldn't expect some of these gaps from way back when at lower levels to get filled. But certainly, right, this gap getting filled is not out of the question. I don't even think this one would be out of the question if there's some sort of a stampede out for whatever reason. Now, a lot of people do think that they're going to be the slick one that gets out, knowing that things are overdone. So again, a lot of people think that. Not everyone can get into it. Sometimes they're really merciless and they'll gap things on you, and you missed your chance to get out of the long side. So again, that's why I think hedging, when you start to see this kind of a bearish engulfing, if you were along, isn't the worst idea. So I'm just trying to impart a few things like that, since we have more time for charts and things like that this week. But nothing as devastating has happened here, right? I think the odds on would be that you do come and close this gap. If this low gets taken out, it would probably be with a 20-day kind of rising into this gap. Now we just bid a little bit in front of that in terms of, or offer out your puts a little bit in front of that, so that if it, you don't wait with the crowd for that gap closure price, because a lot of people will be waiting there. It's just too obvious, right? If that gap high, let's say it's 256, you probably want to be somewhere near 257, right? Because again, trying to take that middle 80% is a lot easier, and it leads to happier times generally than trying to get the extreme prices. Not that it couldn't crack the 20 SMA, it's just that, right, it would probably need that seriously strong news backing it to do that on the first time down, right? So I always assume that on the first time down, that something that's going counter trend is going to probably support where you think the support should be. That's just my presumption. Now, if there's a story and it's something dramatic that's really moves the needle, then you may have to rethink that. But if you don't have anything, let's say news-wise, to operate, whether that's macro, sector oriented, or stock specific, I just assume that it's probably going to at least put up a fight to support, because look how strong the trend has been. But this is really not anything that should shock us, because as we've been saying, that the semis were really overbought, right? If any place was probably still overbought, it was the semis on many different time frames. So these things sort of backing off. I mean, it had an 81 reading on the close on Tuesday, right before the holiday. So that's quite high on daily, and other views were also fairly jacked at that point in time as well. So you had to just keep that in mind, that this thing was probably due for this. Again, that's why I wish I had gotten some bear side companions in for a couple of ideas, but wasn't meant to be this week. Anyway, that's kind of the look on that one. What I would do, right, if they just bring this back in and that's it, I would be ready to see, if you start to see your indicator set on balance suggest that there's another rally attempt coming after it bounces off. Should it bounce off support, I'd go with it, because the trend is still up, and we're coming into probably the gang wanting to mark things up, the gang wanting to get the second quarter off to a good start, the gang having EPS to work with soon, the gang with a holiday. There's a lot of things, and the gang with the fourth year presidential cycle bias, that, and July having been an excellent month typically, due to mainly, I think, due to the earnings engineering, earnings expectations engineering that goes on with the Wall Street consensus. But you don't know for sure, so keep in mind, right, that even the mighty Nvidia's got gaps. Remember, everybody, given what this stock has become and has meant to the market, you definitely don't want to be bidding with everyone for this gap close, right? Closure 96-ish. You want to be somewhere up near the 50 if and when there's some really serious pullback, another leg, certainly in this stock. I don't know if there will be. As of right now, we have to say it's a lot like the other things we've seen, where it's right near the 10 SMA. It found support on the 15 SMA in red earlier today. They managed to hold it for now, but they're really not buying stocks with reckless abandon here late on a Friday. It's not really showing up as this wonderful situation. I just think we can't be disappointed with that, especially because we came into the week with an Esterhaus warning, and we were saying be careful out there, just in case this did unfold, and it sort of did. The good news for bulls, though, is it hasn't really wrecked the charts for them, where you would expect automatically, practically, that there's going to be more downside, right? Aside from, assuming news neutral weekend, it doesn't really, it's in question now, because they were able to hold support as you would want them to if you are a bull. Let's jump over so we've covered the big dogs in terms of the leadership area, the leadership stock. We've covered the Qs, we've covered the SPYs. Let's take a look at the diamonds, and then we'll shift over to IWM. And these have slightly different looks. The diamonds didn't have an awful week, as I said. They are coming back a little bit, so you've got to give them their due. They did break above this former high they reversed from. last week. But look, there was no follow through today, right? So I'll give them their due that they were able to move things back up this week off of that reversal we saw last Friday. Remember, we only have 4 candles this week due to the holiday, but today there's been no follow through. So I think what you're watching there is obviously range expansion beyond Thursday's high. And if you're a bear, you have to wait for this really, I think, to feel like you have a really good opportunity. You've got to wait probably on this unless you're going to get aggressive and trade against this high. If you want to trade against the high, it's a different story. But it's kind of like you got this one indecisive candle to work with right now. It's a smaller range candle. I don't really have a lot to add from that, but remember, there's going to be support from all these SMAs. There's going to be trend line support if it even drops further. Could you still eke out a little trade in there? Sure, you could, but is it probably set up to be a gangbusters trade? I don't think so. It's set up more for like a grind lower, which again would be counter trend to begin with. On this side, though, it's got clearance. That's what I wanted to bring up because I think the path of easier resistance for the diamonds, technically, not that it will, is just that if they get through there, you could say, well, sure, there's this resistance here, or there's some up here, but there just isn't a lot of prior price action at these levels. So they could, under the right conditions, right engineered conditions that the gang is fond of bringing about, this thing could waft right back up. So don't rule, not that I'm predicting that, I'm just saying don't rule it out, right? Don't rule it out. Don't let the sort of poor performance we've seen on balance the last, let's say, week, last few sessions in the market in general, don't have that dominating where you're not objective and you're not willing to say, wow, if this thing does break out, they could come after it. I don't really love the diamonds as a trading vehicle. I think other ones are better, but it's still, if there's opportunity, there's opportunity. I mean, if we see paper in there, I'd have no problem trading it. They have tremendous, just like the other ETFs, they usually have excellent options liquidity. So let's see what comes up for next week. Yeah, I mean, you're looking at, you can play things fairly reasonably dollar wise, and you have markets that are 4 cents wide. So that's pretty darn good if you care. And again, you could play the downside there. I think if I were back where I carried a lot of stuff right now, I think I probably would have, if depending on where this thing closes, let's pick this. I'd probably do one of those half and halves where if I had made some money sort of getting in against that high and saw that reversal developing yesterday, I think what I would do is I would probably close half of whatever I held once somewhere near where we are right now. And then I'd roll the balance down into a slightly out of the money put. And that way, if there is a crack, I'm still in. I can add to it if I want. And if there isn't, I don't get smoked where, thanks to theta, I'm giving it all back and maybe then some, because that just leaves a really sour taste. And I'm always a little bit more cautious playing counter trend, especially in front of all the factors that we've talked about a few times that the gang has in their favor, aside from just being the gang to begin with. But let's take a look at IWM. IWM, again, just can't do it. Disappointing. We thought many times that, hey, maybe it's finally going to join the party. Let's see if it can break out. And it's just been one disappointing affair after another. And so if this ends up with more weakness, I think that's really, the charts are at risk of shifting even more poorly. So keep that in mind, because the gang probably doesn't want to see these small caps being sort of like a millstone around the neck of the market, right? Where these things are performing so poorly. So keep that in mind. I think you can see if you're someone that doesn't run a lot of SMAs, and again, I have my objections to them, but that's why I run the 150 and the 15. I've just seen too many times where we've respected these levels to ignore them. So it doesn't bother me to have an extra line or two on my chart compared to what a lot of people run. But you can see, right, this got right to that 150 and rust, bounced it there. They've done it again today, and again, that first time down, especially getting towards support in a market that's still acting bullishly, you really have to give it its due. And again, like I said, sometimes you got to cheat your bid up a little bit, but they held on to it for now. I don't really have anything great to say about it, though. I just think that it's at risk of really being a problem for the market more than it has been if they let this thing have a poor finish to the month. So then a lot of your kind of bigger picture views would be not looking so wonderful. That would kind of take this negative shift on it, and that usually creates, at least in the short run, a little bit more pressure on it. So probably the 50-week moving average is your line in the sand there. That's probably where 192-ish. So if they let's just call it 190, they don't hold above 190. That's just not really a good look. You've got the lower high in here on this weekly chart we're looking at, and that would be lower high, then lower low on a bigger picture chart that carries more weight than a 2 hour. So that's not really a good look. It's bottled up. It hasn't cracked down below there yet. It's about a 4% crack to crack 192. So it would take a real drubbing next week for this thing to really be under pressure. And so they probably can save themselves just by kind of holding things steady. But I'm just saying that you really don't like to see some of these big picture charts change dramatically from still being in more of a bullish mode to a bearish mode. But let's get back to the daily on that one, and then we'll start talking about some of these. Let's see if there's anything else I can bring up here. I know I want to bring up KRE for sure. Oh, it switched me to weekly. Let me go back. I'm trying to get the 6-month daily will be good enough for now, just to give everyone a view. But so on this one, and I guess and I don't even want this on here. I'm sorry. I try to keep these charts a little more basic, but you can see the 150 SMA there. I think, right, the negative side to things right now is you've got your short-term SMAs downsloping. You can see the 10, red 15, blue 20. You're below the 50. The 50 is also downsloping at this point. You hit that ganglion, right, that confluence zone of SMAs, including the 100 SMA in dash white, and you got sent packing to the 150 pretty quickly. So not a good look as of right now. It might be the tale of two moving average levels, the 150 versus the confluence of the 100 and several lesser SMAs. But if you want to look at it that way, but yeah, so I think you've got to wait and see what happens. But this is you're probably a breakout buyer above the 20 at 202.50. And why does that look so far away? Wait a minute. Is that really 202.50? It is 202.50. Why does it look so much further away? Maybe the scaling is not what I think it is. That's probably what it is. But it looks further to the eye than that. But that's not that far. And I think, this low here, slightly below the 150, is your release point there towards the 200. So we shall see. But I don't think things are going so well there. I think some of the data that I've been seeing that's sort of off camera, it's telling me that some of these construction jobs, because of these new home sales and starts and things like that, some construction jobs are probably going to start being trimmed back. And that in a significant way, it seems. And that's been a real sort of bright spot for a lot longer than someone like me would have thought. So I've got to give them their due. And I hate to see people lose their job, but that would be, I think, a big problem if that starts to really go into sort of retracement mode, where people are getting laid off in droves because housing is really slowing down, and this thing starts to really crack. And it could. I mean, we've got sort of a triangle at work here at the moment. Everyone can see that without me drawing that, but it's becoming a little concerning where, right, you would think that this would have bounced a little bit more to kind of keep with the pattern. It hasn't. It kind of got truncated. It got close here, but it got a little truncated really by the time it closed. So you didn't get that sort of expected bounce, visual expected bounce, if you want to call it that. And now you're back under pressure, not too far removed from the recent lows. And you're below a lot of downsloping SMAs here in housing. So keep that in mind, because that's a problem. And another problem that could be on the horizon that would, again, turn this, in my opinion, turn things fairly negatively in the shorter run, where you would see a little bit more corrective activity, is this KRE. This has been sort of on the recovery, steady as she goes trail since the lows were put in with the market really in October of last year. But you can see, despite so many things screaming higher, right, in terms of the big mega names and bringing those indices with them, this thing's really struggled. So they've done a good job of holding it above the lowest lows really that of the year, but it's not that far removed from those. There, with a little bit more weakness, there could be trouble here. We do have a bearish idea in here until July, just because, well, there was paper. The charts to me look vulnerable potentially if it does crack, and I think if it does crack, it's going to get hit pretty hard, especially with the way some other things are shaping up. So just remember, XHB, KRE looking a little shaky, right? That's probably not what you want to see beneath the surface, kind of like delving into some of these sector situation type things a little bit more. But let's acknowledge, right, that since we're talking about some of that XLE is doing a little bit better this week. Is it out of the woods? I don't think so. We could easily just take our line we've been working with. And I said I really didn't want to see this get too much worse than, in terms of retracement, than 61.8. It didn't quite get there, at least yet. So it does have that going for it. And it does have the fact that it's supported right near the confluence of the 100, I'm sorry, the 200 and the 150 in purple and rust, respectively. So there's potential there. You know, if it can get above the 100, you could see how things can flip from an SMA perspective very quickly, where, you know, just in a few, when things get this bunched up after this much corrective action, all you really need to do is take out the 50 if you can get above the 100, and there's nothing in your way SMA wise. That makes, I think, a lot of people that are SMA oriented feel a lot better about things. So I think it could help out on the technical buying side. So somewhere between the 50 to 61.8% retracement here. You're starting to see a little bit of improvement on some of these basic indicators down here, but it needs to do more work. I mean, clearly, for me at least, you could say, well, I'll take it if it gets above the 100, but then you've got to get above here. That's just about the same thing as my resistance line. And then on my resistance line that we've got there, you could take that trade there, but then you've got really the S50 SMA waiting for you. So probably, because no matter where you go, there's something in your way that could be a problem, you're probably better off trying to take it very quickly once it gets above the 100. Unless you really like to see, you're someone that needs to see more confirmation. But I'd rather take it here and have a quick stop if it can't hold above the 100 than wait for this thing to power up for a few days, get short-term overbought, and then fail once I decide to pull the trigger. So just another little trading thing that someone's preference, that's all it really is. But just want to share that with people, since, again, when things come up that I think I can maybe help out a little bit in certain situations, at least I try to share those with folks if it helped me to sort of think that way or think a different way at some time in the past. XLF. So what do you say about this one with the kind of higher low than this low, right? And this is kind of more of a, I'd say this is more, these are more serious lows than this sort of intermittent low here that it exceeded. But it's working back up above all the SMAs quickly, again, because a lot of the shorties were downtrending. The long terms are still upsloping, and it's working its way up towards resistance, probably at 41.65. So maybe up another percent from here, and that'll be above the, above virtually everything. So all in all, that's not such a bad look, right? I think this is a little mixed right now. My charts tell me that it's mixed, but it could easily flip back to strongly bullish quickly, just as it could flip to pretty concerningly bearish quickly. I think below the 100, you start worrying about that. So I think you have to wait. I would pretty much put an alert it'd be a 41.60, and that would get me ready to start maybe trading it to the long side, depending on how the market's acting. And then below the 100, or maybe just put an alert just above the 100, 40, 80, call it. And then you can be ready to maybe trade that downside if the market's not acting well, or there's reasons why the financials aren't acting well. But those did, let's give them their due. Those did bounce back. And they also came after XLY here. They started out the week strongly, but it didn't do much with it since, but it's definitely back on better footing. You have to give it that much credit. So I can't remember if it was Morgan Stanley or Goldman. It might have been JP Morgan for all I know. My head is always spinning all week long at this point. Just so much happens, and it's so hard to keep track of everything. But um, look, this thing's not very far off the weekly high at the moment, right? It's 10 cents away, and they were telling, I think, people to start shorting the middle class discretionary. So I don't know. I mean, that might be that timing technically is looking a little early to me. I mean, this is suddenly looking better. Now, this might have to do with the earnings magic that's about to be delivered, to our doorsteps in about starting in about 3 weeks to for the next, say, week, month after that. So in 3 weeks, we're going to start getting inundated, and then it just intensifies from there, and so on and so forth. So maybe the consumer has gone into deeper debt, and companies have feasted on that, which seems like it's the American way these days, unfortunately. But that's not looking bad. So again, I don't want to. I hate to be wishy-washy. I really try to be objective and hopefully come to more of like, well, look, things kind of favor this, they favor that a little bit, where it's like we're probably tilting this way. But this, you have to give them the nod. So XLF, XLE, XLY, three spots that look better. And they've really held on to a lot of despite everything, they've managed to hold on to their gains fairly well, I would say, in XLK. They did give a little back here, but today is really not the downside follow through that you would think, well, it's been such a run, won't they at least back it off a little bit more? They may still next week. The corrective action is not officially over yet, but it's still not very far removed, right? You're not that far removed. You're only less than 2% away from the highest high that it broke out to. And so I think you've got to give them their due there. And XLC has stopped leading along with XLK, but it is also hanging in there. And remember, this is another key sector, and it's looking to re-energize there right now. So I would be trading that as a bull if the market felt better to me. If the market closes strong, I definitely would be trading that as a bull. And just to share a few things, we did have some Amazon paper. It's been one of those. These guys have been amazing in terms of frustrating, I think, Amazon breakout buyers. It keeps looking like here and there like it's about to go, and then it hasn't. But we had some paper here today, and I think if it can take out these highs from back here, the 188.35, there could be a whole nother leg that lets it rise into there. Remember, there's you can do it two ways, right? You can speculate on earnings, and I know a lot of people like to do that. I don't like to do that because I don't have time to dig deeply into what the earnings reaction is going to be. And there's also a lot of other issues associated with that. However, the other option, which I prefer, is to play the pre-EPS run, as we call it. And with that, right, you can almost, I shouldn't say almost always, but almost most of the time, you can, if the market's in a bullish mode, they usually do try to put a rally together, at least, to lead into earnings. Hence the, buy on rumor, sell on news. Well, in this case, it would be buy on expectations of a catalyst, sell on catalyst being front and center and imminent, right? That's maybe a little bit safer way to go, but you can go back and look at it, but a lot of stocks do tend to start rallies in front, 6 weeks before to 4 weeks before, probably a little early at 6 weeks, 4 weeks, probably more on target, but then you'll start to see them sort of have this rally action a lot of the times. And if they're delivering that in a market that's delivering good performance, I think it's just a safer trade with lower vol, and the rest of the drill. But we had that one today. We had Texas today. This one also has a, I've got it in the log. I've got some bulls and bears because remember, I try to keep the log balanced when I can, but you can't always do that. And B, some things look better than others. So the Sox L was the short. Meanwhile, the Texas and other ones were potential longs. Texas couldn't follow through and go, so it's getting stuck in the mud, despite the fact that things aren't awful with SMH. They're not great today with SMH, but they're not awful. And another one that we had was Google. We actually had paper, ostensibly bullish paper in Google and in Goog. So I provided an update on that. But I think this might have gotten really to our first target. The first target was up at, I think, 180.83 or something like that. And it got there. But look, I think it might have just made a new. This is what I mean about them coming for other names, right? They kind of left Amazon and Google sort of at the wayside. But if they start coming in for those, that would obviously, those big weights, that would help things out. And you could see that's a new all-time high. So if you're a new all-time high buyer and something that's showing a good performance in a market that's not really firing at the moment and hasn't been since yesterday's reversal began, that might be one to look at. I don't know what's going on there. I mean, you always benefit from delving into the news and checking out what's up there and maybe other developments, but just going on a simple sort of extension, I think this thing's, to me, and if the market starts to get back on its horse and run into earnings, run into the close of the first half, run into the start the second half strongly, run into the holiday, I think they're going to, I think this one's got the potential. But I've been saying that this has the potential for a while, way back, and it's been a grinder. It's never really, I guess maybe because it's so large, I don't know, but it's never really just shot up as much as I thought in a certain sort of bullish phase where it's sort of like the bulls get a hold of it and they really, really power it. There's been some really good moves. It just hasn't had that, like, okay, up sort of maybe like 20% in short order type thing, which I thought it might put a strong move together based on a lot of the other technicals, but it didn't do it. It just kept grinding. I guess you can't complain too loudly if it's cooperated with you overall, but it just saying, I thought there would be some real performance at times and it just hasn't followed through. So I'm trying to think back if there's anything else that I could really share that stuck out to me this week. A lot of it was just, again, improvement across the board. I'll pull in my my sectors, and you can just give everyone a quick look at those. But most of them did, right, try to move back up, like the XLE. It's a little bit tiny to see, but the XLF is, that like it just was a good bounce back week. It's almost like they got the memo when we said we were a little concerned about certain things we were seeing, and a lot of these sectors were on the ropes. They really came back in and tried to repair that largely. It just didn't really carry as far as maybe it could, but maybe it will next week. We'll have to wait and see if it will. There's more to this story. And that's another way, right, to buoy things. So if they're coming in for a few select names, they can let some things go. They can let SMH and NVIDIA correct a little more if they want to. And then maybe you start taking up things like, remember Meta, we had some good drops in Meta and Apple. They were part of Rebel Pit Pro this week. And they could start coming back in for those. I've got a bullish idea in here too, on this one in case right there. I want folks to be ready to go in what's been a very strong leaderish type stock. And they're not very far from the all-time high there as well. So that idea, I think, is still good for a little bit longer on the UOA that we had in that one. So that one might be still worth keeping on your radar. And Meta, I think, becomes a little bit of a Meta and Apple actually become oversold bounce back candidates, because I'm feeling fortunate about that because we had both of them in Rebel Pit Pro this week, with Apple being the focus name. But you could see it opened, I think Apple opened the week. I'm sorry, we're looking at Meta. I wanted to switch over to Apple, but this dropped quite a bit after Tuesday when we presented it on Tuesday. right there on that day. The high was 506 that day, but ever since then, right, it's dropped down pretty decently. So I can't complain about that one, nor can I complain about Apple, because what we try to do is find stocks that have bi-directional potential, right? Depending on which way the market goes, we'd like to have a mix, ideally, of things that are going to work well in either direction, or at least a few that are going to work, we think, very well in one direction, while the other few will work very well in the opposite direction. So people get a really good mover for the week, at least one or two of them. It doesn't always happen. Of course, the market's not always in that kind of a mode to deliver that. But the ideas went out, on Monday, but we covered them on Tuesday morning. And Apple just kind of was heavy all week. So that was a good little find, because we just felt as though it was stretched, and that they might take a breather from that and go into other things. But now that both of those have pulled back to support, remember, if they hold there and start taking back up, they'll have a lot of things working for them, and they came in after the sectors too. So on all those notes, right, there's a lot that I hit you with there that's sort of extra stuff that we don't normally cover, but there's a lot of UOA that ideas and some momentum ideas that we've had that are now, I think, potentially set up to continue to go. So you've got to be on guard. Despite my concerns and the things I've shared the past few weeks, and a lot of these worsening things that we keep chronicling, you've got to try to remain open to trading with the trend as long as it's still intact. And we haven't cracked anything. Remember, this could all be different Monday morning. Apple could be cracking that 10-day in white, and other stocks are too, and the market's reeling. But until that happens, right, it's really, you can take your little quick reversals, but you don't really want to overstay your welcome going against strong trends for too long, especially if you're starting to see signs that things are starting to repair themselves and so on and so forth. But that's not happening here as we approach the bell in SMH, at least, and that has been the leader. But just don't shut yourself off, I don't think, to any one side and say this has to happen, that has to happen. As I've said many times and across the years in these videos, these trends can persist and just be seemingly more and more irrational than you could ever imagine. They just persist longer than most people would ever expect them to, myself included. And that's why I learned the hard way that you just have to keep going with them, despite your qualms about them. You've got to continue to go with them because they can persist. So on that note, I think I'm going to wrap things up. Again, I want to thank everyone for tuning in. I hope that something that I shared with you helps you out this upcoming week or some week in the future. We are at that point where we need to see more from this market to really decide what to do with more conviction. And as long as support holds and you see this thing turning, I would be ready to go right back with it again, because they are setting themselves up for, they are trying to set themselves up as the week ends for a lot of things to be percolating and potentially percolating. But remember, that assumes news neutral weekend. If you have news, of course, that can change anything, but I would still be willing to trade this trend, even though I am concerned, right? So it all changes, though, if support starts getting cracked, not just in one place, but in many places. Then I'd say there's more follow through. So you just have to wait and see what Monday brings. There's nothing we can do. I think it doesn't surprise me either that we're at sort of a critical juncture to end the week. A lot of times these guys manage to fortify things over the weekend, and then it's almost like the weakness never happened in the first place, or what was that all about, right? So we'll see that. We'll see what they dish out to us. So everyone have a great weekend. Again, thanks for tuning in, and I'll be in touch through the usual channels. Thanks.